Ladies and gentlemen, welcome back to the live crypto trading room brought to you by Cracking Cryptocurrency. Hopefully everybody is doing absolutely fantastic today. Today is Thursday, February 15th, 2024. And it really feels like we are just blasting through February. Ladies and gentlemen, it is going so fast. I looked at the calendar just like this morning on that date, and I always kind of glance down, as you guys will probably notice at the beginning of the stream when I get to the part where I'm like, today is insert X here. I always kind of glance down at my, Windows dock just to double check that I'm going to get the date right. And it's just occurring to me, gosh, that we are just flying through. And that makes me think about my portfolio. It makes me think about what I'm doing in the cryptocurrency markets this cycle. And it's making me realize that, all of these, a lot of things need to start getting battened down, right? We need to batten down the hatches. Things need to be happening a little bit more rapidly, a little bit more quickly. And simultaneously, I contrasted where I'm at with my journey in investing and trading this cycle, and realizing that my portfolio is like 85% done for the most part. I've got almost all the allocations that I want. The only allocations that are left are really tokens that are yet to launch and some modifications that I want to do as far as weighting in my portfolio. And that made me realize, as I've been stressing this to all our premium members in the premium trading group as well, that it's very important for them to kind of progress on that, to get progress on that as well, to make sure that you understand what you want in your portfolio, to understand why you want that in your portfolio, to research how to construct a portfolio. Are you going to construct your portfolio based on exposure? Are you going to construct your portfolio based on risk? Are you going to base your portfolio based on predictions? There's no right answer, but either way that you do it, if you don't put money into the markets, you're not going to get money out. And it can be very difficult or scary, dangerous, I guess, especially too, if you make the wrong choices. It can be dangerous or difficult for lots of individuals who are seeing, prices where they're at right now. Like we're up 50, we're up so much, right? We're at 52,000. Bitcoin isn't at 20,000 anymore. Bitcoin isn't at 18,000 anymore. We're not at 30,000 anymore. And so people who have kind of been too scared to build their portfolios are now kind of looking around and feeling like, oh my gosh, this bull market's going to run away without me. And you never want to be doing anything out of fear. You always want to be doing things out of logic. So I don't want to scare you guys. It's not like you guys have to run out and get your portfolios done right now today. But if you aren't setting goals on your calendar, if you aren't working to achieve those goals on a consistent basis, if you aren't moving forward towards your goals, towards progress, if you're not tracking your progress, if you don't have the results right in front of you, whether you're tracking the results of your trade, whether you're tracking your airdrop, engagements, your points, whether you're tracking your allocations in your portfolio. I mean, most of you people don't even know how many coins you have and where they are, right? And again, probably not to the viewers of this channel. We tend to be cut from a slightly higher, cleaner cloth, but these are just things we need to think about, right? So again, just my exhortation, guys, this bull market will leave you behind. This bull market will have the opportunity for, life-changing money, as all previous cycles have. These opportunities will not be around forever. These are not opportunities that typically exist in the stock market or the Forex markets. If you want to be a Forex or a stock trader, it's a very different scenario. All you got to do is buy spot and chill, all right? Build a strategy and trade and earn extra income. That's what we're doing here, folks. All right. With that slight exhortation out of the way, let's get the music going. As always, let me know if you guys want me to turn it up, turn it down a little bit. Personally, I like quite where it's at. All right, Bitcoin, let's get started. Bitcoin currently trading at $51,954. Isn't that a beautiful thing to say? We are at the zone, guys. We're in the area. We're in the area. All right, this is a low volume node, LVN. LVN for the win. LVN for the win. Let's bring up PTP. Of course, this is the Bitcoin weekly time frame, and you can use this beautiful tool called VRVP, visible range volume profile. It used to be VPVR, volume profile, visible range, but visible range volume profile makes a little bit more sense, I guess. But whatever. We're splitting hairs. Who cares? This is a low volume node. What do we know about low volume nodes? We know that price is very likely to do one of two things when it reaches a low volume node. First off, what is a low volume node? A low volume node is an area of the market where there is a very little liquidity. There is very little transaction volume at this price area horizontally. All right. So just not a lot of people actually traded in this area. And we can just take our cursor and, we can look at this, where this low volume node is, right? And I'll just zoom in so you guys can make sure you see this very clearly. This is what I'm talking about. I'm talking about this little valley right here in the visible range volume profile. This little valley right here is the zone. This is the low volume node zone. Not a lot of people traded in this zone. All right. And what does that mean for price? It means the price, when it got here, really just shot through. Look, we shot through on the way down back here in 2021. We shot through on the way up in 2021. We shot down through the zone in 2021. We shot up through the zone in 2021. All right. So we have historical precedent of price just tearing through this zone. All right, tearing through this zone. The other thing that is likely to happen in a low volume node, okay, is price will reach that area, not find the liquidity it needs to continue climbing higher, and reverse. Okay, now I have been getting hit in the face over and over again with the trading account. Obviously, long-term portfolio is doing good. Swing trades are doing absolutely fantastic. But with my day trading, discretionary day trading, what I keep seeming to do is shorting pumps. All right, and that's gotten me in trouble. All right, we're not doing fantastic the last 4 weeks. Actually, we're doing fine the last 4 weeks. We're just not doing very good the last 2 weeks. All right. Now we have another loss on the docket to account for. So we are going to do a couple of things differently. First off, with our day trading, we are going to start doing our trading journal live on the air for our copy trade accounts. For the copy trade account, so that we can go over that. And we are going to disable the red button for the next 7 days. All right. We're going to disable the red button for the next 7 days. We're not allowed to short for 7 days starting today. All right. I've talked about this before. This is, traders don't want to do this. Lots of, especially guys don't want to do this because we don't like being told what to do. We don't really like following rules, right? We think, oh, like my rules are good. And if it's my way or the highway, this is how most guys are. It's certainly how I am. And this is fine. This is what can give individuals their determination and courage and tenacity that are very attractive qualities and are actually very useful qualities in life. But when it comes to trading and learning from your mistakes and honestly evaluating your progress and making necessary changes so that you can progress, so you can break through barriers, so that you can overcome difficulties, so that you become better, faster, smarter, more dangerous, then we kind of need to do what we're told sometimes. And telling ourselves what to do is better than having somebody else tell you what to do. So figure out your own BS before you have to have somebody else figure it out for you, all right? Therapist or whatever, right? So words to the wise. So We have talked about this before. This is one of the first resources we give all of our premium members. It is the cardinal sins of trading. Let me actually show you. Let me see if I can pull it up. It is going to be here. Let's see. Going to be in the introductory and beginner material folder. I believe it's in the tools folder. The cardinal sins of trading tracker. All right. All right. Cardinal sins of trading. Here we go, ladies and gentlemen. What it is. All right. Okay. So we have the cardinal sins on the left and the cardinal sins. Let's go over these. What are the worst possible things that you can do as a trader? These are things that you should not be doing as a trader. First off, poor risk to reward trade. All right. We don't want to take trades where the risk to the reward is negative 9 times out of 10. There is an exception to this rule. If you have developed a strategy where you have accounted for your hit rate and your win, basically your win rate. If you have a strategy that has an extremely high win rate, you know, something like 70 or 80% plus, sometimes you'll be able to create scalping strategies like this. Then, you know, and you've coded into it, you've created it to have poor risk to reward trades where your stop loss, like these are, you'll often find these like with day trading, reversion to the mean strategies, where you're trying to fade any breakouts or fade any breakdowns, and you're just trying to take price back to maybe VWAP or the middle of the range or a Fibonacci retracement, whatever it might be, back to a moving average, whatever. You know, typically in those scenarios, you want to set your stop loss kind of far away because the danger of like getting stop ran and having these big kind of crazy volatile wicks to the downside or the upside in a trading range can be very dangerous if you're using tight stops. So in those scenarios, we can see poor risk to reward trades. But in general, when you are normally trading, and if you do not have that very specific strategy that can allow poor risk to reward trades, poor risk to reward trades will just get you in trouble. All right, next, entered too soon. All right, this is generally with a strategy entering before you have a fully confirmed signal. We get excited about a trade. We see a big, you know, a movement in the direction that we want to trade in, and we hop in and we get stopped out. So not good. Entered too late. All right, this is when we get a signal and we don't trust our system. We don't trust our strategy. Right? We're like, we think about it. We think about it. We think about it. We think about it. Price pumps a little bit more, and then finally we get in. But that was the movement. We should have gotten exited too soon, right? Snatching profits too early. Big problem. Exiting too late, not listening to your exit signal and being greedy. All right. Non-strategy trade, right? Taking a trade just because you feel like it, because you're excited, discretion, whatever. No. Incorrect stop placement, right? Not taking the time to set your stop loss properly. All right. Wrong position size. Wrong position size. Right? Not taking the time to calculate out your position size to keep your risk in check. You got to do it. The math is important. The math is what makes the magic happen. And finally, didn't take a planned trade. All right. This is when you build a strategy, you build a system, you know what your setups are, you see your setup, it's the perfect setup, you know you should take it, and you don't because you're afraid or you think you're smarter than the market or this or that. So all of these things we need to avoid. These are all cardinal sins of trading. These are all, almost every single one of these is responsible. When I do mentoring, whether it's group or individual one-on-one sessions for our premium members, these reasons are why they're losing money, right? It is generally almost always one of these reasons, all right? And I'll tell you what, the most common reasons, I will tell you right now, the most common reasons, of course, overall is this non-strategy trade. People come into our community, people get into our workshops, and they, you know, what we do is we teach people how to build strategies, and they get in and they don't want to do the work. So that's a common issue, just non-strategy trades. And then, of course, wrong position size wrecks so many traders, right? Just going far too large. This is generally the problem, going far too large on a discretionary trade and then getting wiped out. Incorrect stop loss placement is pretty common. But in general, incorrect stop placement, this is one of the easiest problems to fix. So it's one of the it's one of the ones that I actually like to see when I'm working with a client. And yeah, so all right. So we'll just kind of get off that for now. Hopefully that's helpful. Again, this is a resource. This is just a nice little tracker. Oh, and this is the point, right? This is the point I'm trying to make. Do you notice how we've got basically you get to make like 9 mistakes and then you have to stop trading, all right? You have to stop trading, okay? These cardinal sins will destroy your edge and your profitability. Learn from your mistakes. That is the only way to achieve greater success. Your future profitability depends on you recognizing when you commit a cardinal sin and correcting that behavior. So what is one of the most important skills for trading and in life in general? Being self-aware. Being self-aware and keeping notes. Keeping track of everything you're doing, man. Track of everything you're doing. So this is just the same for me, right? I have I haven't really committed a cardinal sin that falls directly into this category, but what I have identified is that shorting right now is causing me to lose money. So I'm going to stop shorting, right? And it sucks because sometimes, see, now you automatically hear me like kicking in, trying to rationalize like why it's okay for me to go against my rules, right? Yeah, it's very common for traders, right? Because we're generally very intelligent individuals. We're very good at like rationalizing. But you know, again, humans aren't rational animals, right? We're not. We're rationalizing animals. We don't make rational decisions. This is the tragedy of the commons, right? It has happened over and over and over again. So many scientific studies on this are done. Humans do not make rational choices most of the time. We make emotional choices and then we rationalize that choice to ourselves and to our friends and family. That's what we do. That's how human brains work. So being aware of this and trying to align yourself with objectivity is very, very helpful. Right. But like I said, I've identified that shorts are causing me to lose money. So I'm going to stop taking shorts. What I was going to say is that sucks because oftentimes when you get to that level of max pain, it's generally the time that shorting is good, right? But we're just going to take it off the table, all right? We're going to take it off the table with and being very specific with the copy trade account, right? I'm still going to recommend what I'm going to be doing in my portfolio. Still recommending downside protection here in the form of hedges and option trades. So again, don't get it twisted. Anyways, Crypto Bull 21, yes to crypto. We got Ethereum 1. We got Rora Nora in the chat. What's up, guys? Good to see you so much. Thank you for joining us today. Hello, hello, hello. All right, what else do we want to talk about? All right, let's talk about Bitcoin. Bitcoin's at $52,000. And I don't know why that's so far up there. That's really far up there. All right, anyways. Bitcoin at 52,000. And what is our game plan right here on the charts? It says, look for a big reversal at 52, 53K. And this is so I added this line here. During mentoring yesterday. And I want to talk about this. Because I feel, you know, it occurs to me, right, that I come on stream and I say things and I know that people, make decisions based off what I say. So I understand sometimes you don't get the full nuance or the clarity. You don't see everything that I'm seeing, right, or have the experience. So we are looking for a big reversal at 52, 53. Why? Because we're entering into a low volume node, okay? Simultaneously, we don't want to understate the power that this bull market has been having. We've been having an incredibly powerful bull market where, you know, short speculators are basically just getting hit in the face over and over and over and over again. You know, they're just like, please stop it, daddy. Please stop. So we don't want to undercount that. However, we are still entering into a low volume node and markets are still markets, right? So we still want to identify these technical aspects of the market and account for them. So low volume node at 52, 53,000, we expect price to do one of two things, either reject hardcore or break through it very quickly. And if we break through it very quickly, well, the next stop is going to be 57,000, right? And if we get to 57,000, then a reversal looks less likely because 57,000 is a high volume node and will probably consolidate up there for quite a while. Now, we might break down from there, okay? But that will take us probably several weeks, if not a month, to figure out, which is putting us toward the end of March at high prices, and hedges are probably going to expire worthless at that point in time. So we need to do two things. We need to do three things, all right? You need to do the three things that, well, you can. This is what I'm doing, right? A, I'm staying long, all right? I'm staying long. I am not going to preemptively short this rally, okay? I'm staying long, all right? I'm staying long. I'm not going to preemptively short this rally. Now, if we see a reversal pattern here, or if we start to see, again, all of our warning indicators are flashing. Our reversal model is flashing a warning sign, but it's not saying imminent decline. All right, so we want to be aware of that. So even though we're in warning, the market still could sell off very quickly from this low volume node. We just got to see what flow does, right? Flow is either going to come in real bearish or it's not. If flow does come in real bearish and we see, you know, a death candle, or we see like a hanging man or a shooting star pattern or something like that, all right, then we'll talk about reversal shorting on the daily time frame. The daily is going to be giving us our trigger for this, right? The weekly just is the game plan. We typically don't take trades on the weekly. We typically take trades on the daily. We identify the trend and we identify the game plan on the weekly, and we execute on the daily. Similarly, we kind of identify the game plan on the daily, and then we can go down and execute on the 4 hour, the 1 hour, right? We kind of identify the game plan on the hourly, and we execute on the 15 minute and the 3 minute, all right? This is the way, this is multi-time frame analysis, all right? But, all right, we're going to stay long, all right? We are going to continue to purchase downside protection in the form of options, all right? I'm quite partial. Again, I'll just show you guys what the fair price is, and then you can get relatively similar prices. It doesn't matter where you're trading options, okay? For those of you who can't get on ByBit, ByBit is going to be giving you pretty good options. For those of you, because if you can't get on Deribit, you certainly can't get on Binance. So if you can't get on Binance or Deribit, you most likely can get on ByBit, and OKX also has options, right? So ByBit and OKX are your options if you can't get on Deribit and Binance to get access to these options. And for Americans, you can use Ledger X. The Ledger X is fine. I do recommend them. I do use them. The only problem with Ledger X is that liquidity is significantly lower than it is on any of these other platforms, and therefore the option premiums are going to be significantly more expensive. Now, are they still good trades? Most of the time, yes, but the premiums are significantly more expensive. You also have on-chain options like Tails and Krill. So again, Tails is fine, but the problem with on-chain options, while they're great, okay, and I've used them before and would recommend using them if you don't have any other option. The problem with on-chain options is that you need a much more significant move to generate a profitable trade. Right now, if you hold the position to expiration, the way that most of these AMM options platforms work, you're going to be fine. You'll make a butt ton of money, like 2 or 3x your trade. But it's not like an option on Deribit. It's not like an option on ByBit or Binance or even OKX, where you can get a little move in your favor and you can have a wildly profitable trade. And if price if you buy at the money puts now, like on Deribit, like we can just go to the profitability calculator, right? This is all you need to see. This is how a regular option works, all right? So we want to go long. Or sorry, it's already loaded. If we wanted to go long, the March 29th expiration at a $50,000 strike price, all right? That's going to cost us $3,692. That's for a full unit, all right? You don't have to buy a full unit. You can buy a tenth of a unit, right? So you could get this position for as cheap as $369, all right? Or you could buy a full lot at $3,692. That's going to give you control over 1 Bitcoin's worth of a position size, right? So about $52,000 worth of position size for under $4,000, all right? That's how much you're gonna pay to control that. And your break-even price at the 50,000 strike is $48,961, meaning you don't lose any money if price closes below $48,961. But if price closes any below that, I mean, you're making thousands of dollars, right? And if price were to, for $4,000, if price were to crash all the way down to 30,000, you're making $16,000, all right? In a 4x. So options are fantastic. But yeah, Tails is not going to give you as a nice trade. Like, for example, if we go to Tails, like I've been, I kind of like check this every single day. But let's go over to Tails. And we want to get, so this is Tails options markets. If we want to buy Bitcoin, and also they added in this, I noticed this, Tails added in this thing where there is now, and I think this is pretty cool. I want to find out what kind of algorithm they're using, or what kind of model they're using to calculate these reduced returns and boosted returns. Because basically, as we can see here now, if you get an option now on Tails, if you buy a call, right? If you're betting to the long side, and because basically it's saying because that's so likely to happen, you're going to get a negative 4% reduction in your profit. But if you bet to the downside, which it's saying is less likely to happen, you're going to get a boosted profit of 2%. Now, obviously, these numbers aren't crazy. They do matter. Like a small percentage of a very large number is a very large number. But it's very interesting to see this. I think this is fascinating. And potentially, we could even use this in a strategy, right? Because they're using some algorithm to crunch what is the likelihood the price will move up versus move down. And that could be very valuable information for traders building a strategy because this is cool. All right, so I just realized I'm in speed markets. Hold on. Yeah. Okay. So that's only a thing in speed market. Okay. I apologize. But still, same thing. All right. So Bitcoin, we want to bet down. We want the, we'll just select the April 19th expiration because that's the closest thing they have to the March 29th. And we want to buy the $50,000 strike. And the maximum we can buy is $4,296. So if we max that out versus on Deribit, you could put it, you know, $100,000 into it if you wanted. Right. So at a max bid of $4,296, basically you need to hold this to expiration till the 19th of April. And, you know, you'll basically double up. You'll get almost $9.5 grand, right? $9.5 grand. Okay. Plus, like tails, you might get like some tails points, or, you know, God forbid, even like a optimism, you know, like, or arbitrum, like, you know, distribution or something like that. So again, all things, but again, I want to go back and point out that algorithm that Speed Markets is using to somehow calculate, you guys can see that, to somehow calculate the likelihood of price moving up versus moving down. I think that's pretty cool, right? So again, tails is saying that price is much more likely to move up than down. All right. I wonder, does that change if you, does that change? It doesn't matter. It doesn't matter whether you know, whether it's a 10-minute trade or an hourly trade. All right. All right. Gotta love me them exotic options. All right. Let's get back to, right. So yeah. All right. So listen, as wise market makers have said, you know, hedge when you can, not when you must. Listen, prices are quite high and we still have quite a high risk of a pre-halving dump. All right. Everyone's getting super like getting spun up. And listen, I don't want to be the bearish guy that's like, oh, you know, like, you know, I'm shorting every pump. You know what I mean? Like, I don't want to be that guy, but at the same time, guys, I'm trying to just give you guys the best technically correct information. And you hedge when you can, not when you must. And if we go look at Bitcoin, if we go look at the Bitcoin volatility index right now, the BVIV, USDT dominance is continuing to fall off a cliff. But if we look at BVIV, BVIV is almost at 60%, 59.33. And as I've said, again, we've got cheap options down here. These are expensive options up here, and we're about in the middle of the range, right? So again, paying fair price, decent price for downside protection right now in the form of a put, and I highly recommend. Highly recommend. All right, highly recommend. It's the right thing to do. All right, but stay long, because if we break 52.53, we're going to go to 57.58, and if we go to 57.58, we might be going to 140,000. And listen, like, it's entirely possible that we do not get a pre-halving down. It is entirely possible that we do not get a pre-halving down. You know, even though, again, so you know, again, you just have to be willing to not impose your will on the markets and let it do what it's doing. Daily time frame. All right, the RSI remains oversold. Okay, we do have the. I think I want to make these. Hold on, I just want to make these a little. First off, I'm a little smaller. No, not text wrap. I think we can take them off. I think, yeah, order is just very distracting. And I think, yeah. Like 20%, I think good. I wanted these to be a little less distracting. They're very much in our face right now. And I want them on there as markers and not as like, look at me. So. Okay. Daily time frame. TSI is still quite bullish. We are coming up very close to the top of this kind of bullish megaphone structure that we have been seeing be very popular, just connecting these highs. We are coming up to diagonal resistance. BBWP is darn near close to being peaked here on the daily time frame, which is typically when we would expect to see the market start to peter out and put in some sort of reversal, or at least chill out for a little bit. We are getting a bearish cross under right now in BBWP as well. Again, it's not necessarily bearish because it's volatility. Volatility is directionally neutral, but volatility kind of lets us know where it's the gas tank of the market, right? Is the market speeding up or slowing down? It looks like the market is likely going to be slowing down right now, which would be good. That would be confirming our reversal at 52.53. But again, remember, the market can remain irrational much longer than you can remain solvent. So being early is, you can be too early, right? And it's the same as if you're too early, you're wrong, right? Being too early is the same as being wrong, all right? But again, two nice up thrusts that we've had here. Pretty good. BBWP now getting peaked. Let's see what, basically, let's see what the market brings. All right. And looking at a reversal system here, do we have any confirmation of that? Again, ISIS spot is overbought here. No bearish cross under yet. And we have now entered into danger territory, right? Our CM Laguerre, or not CM Laguerre, it's Chris Moody, but look at the Laguerre PPO. This is the indicator by Chris Moody, but Laguerre PPO has been around for quite a long time. Laguerre PPO is now giving us our first red line territory. Now, of course, keep in mind that we did, again, we can red line for quite a while. All right. We can red line for quite a while. But we are just getting our first warning sign of the market being pretty overbought. And makes sense too. Like, you know, we've had a pretty decent rally, but you know, I would say at this point, there's thing. So, so not too much to say here. Again, keep our eyes out. If we're either, again, it's very clear. We're either going to reject from here or we're going to blast all the way through to 57. Either way, you should probably stay long and wait for that confirmation of a rejection and then look to play that however you feel is appropriate, whatever your edge is, however you tend to do well with shorts. That's the game plan. All right. We're either rejecting from here, low volume node, BBWP getting peaked, getting overbought, getting into the red zone, reversal systems flashing. We're either going to reject here very powerfully from 52.53, but stay long and wait for confirmation, or we're going to blast through to 57.58. And because the dominant directional trend is to the long side, is bullish, price has been appreciating much more than it's been declining, we do want to maximize our efforts toward the long side. So that is why you want to continue to stay long, even if we do get a rejection here, because you don't want to preemptively short. That's wrong. That's what reversal traders do. We're not reversal traders. You want to react. You want to react. You want to react, right? Don't predict, react. All right. Let's see here. BTC LTFs. Let's take a peek real quick before we move on to Ethereum. All right. First off, let's hide our, oh wait, we do want to hide our indicator. Tracting. All right. Unfortunately, we didn't get this fill. All right. That would have been a nice fill to get. I should have gotten greedy here. All right. I should have gotten greedy in retrospect. That's all right. But we did set, so we can go ahead and cancel those now. So let's go look at our open orders. Right. We had established, we had set this BTC and F limit longs right above. We were trying to front run the liquidation zones. Okay. Didn't get filled. That's fine. So that cancels. All right, cool. So that position has been canceled. Let's go to CoinGlass and get our updated daily liquidation zones. Okay, let's see here. We've got some liquidations at 52,555. So let's just put that on the chart because that might be important today. But we're just going to use a line for that. Excuse me. And then we've got our serious liquidations that come in at 52,912. $912 to $467. Why does that not look right? I don't know. 52, 912, 53, 460. There we go. All right, liquidation zone. That's a pretty thick baby. But the idea here, guys, is pretty simple. All right. Again, if price is going to reverse, it's going to do so from here. If we get above this, we're going to 57. 157. There should be no reason why. We can just see, I mean, again, but the liquidations are thick here. All right. The risk is thick here. All right. So these are all the liquidation zones of everybody who is shorting the market, basically. All right. This is all the risk. And there's a lot of risk there because that is not super high up. All right. That's only 2% away. All right. So these are all the 150x shorts. 150x shorts. All right. Are right here. The 150x short stop loss. All right. Yeah. If price is able to take out the 50x and the 100x shorters, I believe there will be sufficient momentum to carry this out. Again, then we clear through the low volume node. We clear through the low volume node and we start getting the high volume node territory. All right. So there's the liquidation zone there. Where is our support liquidation zone? We just kind of tapped it. All right. 51, 761. 761 to 160. Right there. All right. We got very clear support and resistance here, guys. And price is consolidating basically right in the middle. So I don't see a huge opportunity for trade right now. What do we got? We consolidated here. Price moved up. We've reclaimed this as support. We've had 1, 2, 3 drives into it, and we've had 1, 2, 3, 4 drives at resistance. Well, 1, 2, 3 drives at resistance, 1 alley-oop, and then 1, 2, 3 drives at support. All right. So support and resistance is getting kind of weak. We can kind of look for a breakout. Let's see what 15-minute BBWP is telling us. Like, are we ready? Is it happening? Is it time? Should I call my mother? Should I tell her to pack her bag? Oh, I had the indicator. No wonder I'm not. All right, what do you got to say here for me, BBWP? Yeah, volatility got crushed here, and then we had an alley-oop. Yesterday's point of control is acting as very strong support. Yeah, when I say alley-oop, I just mean like stop hunt, liquidity run, you know, deviation, right? Deviation would be the smart money concepts term, right? Range deviation, right? Support deviation, resistance deviation, right? Basically just price goes above a level of resistance. It's not any genuine breakout. It's just the liquidity run, grabs liquidity and price moves. Now, as opposed to other traders, I don't think that there's, and again, I could be wrong about this, but I don't think there, I don't take that. I don't take away from that any like further predictions about which way price is going to go. Like what I'm saying is just because we saw price here alley-oop to the upside, I don't now think that price is going to go up or down out of this consolidation zone. Like I just don't care, right? I don't think about that. Now, again, other traders do not necessarily agree with me, but that's okay. That's okay. Because they're wrong. So let's see here. Nice break. Listen, nice kick up from support and holding the mid-range. I'm not really seeing anything juicy here for Bitcoin. So the opportunities here are going to be, of course, buying the breakout, fading the breakout, shorting the breakdown, fading the breakdown. Right? And those are going to be the opportunities. We're going to stay long. We're going to stay swing long because why not? We are going to be waiting and watching for any red kind of bearish close today, and potentially, if that again, we're still listen, I'm buying downside protection, right? So I've got options. March 29th strike at the money puts. $50,000 strike, and we're just gonna chill, right? You can buy the $52,000 strike, but those are a little expensive. I think 50,000. But you know, if you want to buy 52,000 and pay a slightly higher premium for a little more comfortable experience, that puts your break-even price at 50,000 versus 48,000. That's good too. That's fine. Absolutely fine. Just make sure it's right for you. All right, so price still pushing up. Again, I don't really see it. We could take a mid-range opportunity, but I'm not seeing any trading opportunities here for BTC at the moment. Let's see. Yeah, the strategy, or wait, hold on. Sorry, we're not running the strategy on the 3, are we? Strategy is profitable on the 3, but right, we're running the strategy on the 15. We're running the strategy on the 15, and the strategy still wants us long. One second. I need to see. Okay, easy. That's fine. Wait, there we go. That's just forever. Top loss multiplier is 3.5. And how much risk are we taking per trade? I don't see why. I don't see why at a 2 to 1 profit factor and a 52% win rate, we would not be at least 2% risk per trade. Unless that boosts up our max intraday loss to a level that we don't want. Right. Max drawdown was only 11%. So yeah, this is what we're rocking. Sucks that we got such a late entry. What do we want to do here? Does that even make sense? I don't think that. It does make sense. We're gonna wait. Yeah, we're just gonna wait here, folks, because I don't want to put my stop loss in the liquidation zone. This is very likely to come down and hit that area. The strategy is also a breakout strategy, so we're not breaking out, we're consolidating. All right, what's up, guys? Funding rate. Tyler says the funding rate is high. Okay, that means it's going to be very expensive for longs to conduct business right now, but that's just bullish, right? When things are incredibly bullish, you got to pay to be long, and that's just how it is. XRP's finally looking good. XRP dopamine. Hey, man, I just got stopped out on XRP. I don't want to talk about it, man. But congratulations to XRP. Let's see. Yes to Crypto says, I'd like to understand funding rate better, specific to Fairdesk if possible. For example, if I open a 10x long, what do I care about for how long it stays open? Then same question for the 10. Yeah, so funding is very easy, right? Let's explain funding. Okay. Let me see. This is my dear Lord. Sorry, guys. Give me a sec. Can I just start with a blank canvas? Thank you, for the love of God. All right. Oh, I don't have like really kind of crazy. Anyways, let's do this. Let's explain funding. Now, you asked for Fairdesk Pacific, but it doesn't matter. It's going to be the same on all exchanges. So funding is a thing, okay? Because futures are a thing. All right. So funding is a thing because futures are a thing. All right. Obviously, with spot, there's no such thing as funding. So we know that funding is a dynamic of futures markets. All right. So funding is a thing because futures are a thing. Okay. Pretty simple so far. All right. Now, maybe I should. Right. All right. Now, funding is a thing because futures are a thing. But why? Okay. We know that there are futures markets that are not crypto, right? We know that there's SPY futures. We know that there are, Forex futures. We know that there's commodity futures, right? You could trade gold futures, silver futures, futures on the SPY. And that's different from buying shares or certificates of the SPY. Buying a futures contract for Apple, going long on Apple futures, does not give you any ownership of Apple stock. All right. Because futures, just like options, are secondary derivatives markets. All right. They are markets. They are gambling markets, right? That are built on top of an order book style market economy, right? Where you have shares of a company that are being actively traded in the primary market, between large entities, and then between primary entities and secondary entities on the secondary market. Secondary markets being things like the New York Stock Exchange, ARCA, and stock exchanges where retail individuals can come and engage. So why is there not funding on SPY futures? Why is there funding in crypto futures? Because there are two types of futures. Okay. There are cash settled futures and there are physically delivered. Okay. And they're very different. So with cash settled futures, let's say I'm going long on soybeans, right? I'm going long on the commodity soybeans with futures, right? I'm not buying shares of a soybean company, all right? I'm going long. I'm speculating that the price of soybeans will be higher in the future than it currently is, right? And I am buying a contract, a futures contract, with a counterparty who is the other side of the trade. The other side of the trade will lose money if I make money. And if I lose money, the counterparty will make money. That's how an options contract works. There's two parties, right? The person who makes money and the person who loses money. And with a futures contract, it's the same, right? The person who makes money and the person who loses money. There's a counterparty to your trade. If you get a big win on a futures trade and you're like, yeah, just remember that somewhere out there on the other side of the screen is somebody who just had an equal loss. All right. So it's a dog eat dog world. All right. There's cash settled futures, which means that when the position is closed out, you guys just settle your difference in cash, right? Like regardless of what we're speculating on, soybeans, Bitcoin, SPY futures, doesn't matter what we're gambling on. But at the end of the day, you're going to pay me out in cash. I'm going to pay you out in cash. Okay, cool. It's all cash. Physically delivered futures, on the other hand, are slightly different. If physically delivered futures means that when our contract expires and let's say I went long like $1 million worth of soybeans, I need you to deliver to me $1 million worth of soybeans. All right, like period. Oil's the same. Bitcoin is the same. We have if there were physically settled Bitcoin futures, right? You get paid out in Bitcoin. All right. So when Arthur Hayes and BitMEX, all right, now enter Arthur Hayes and BitMEX. Arthur Hayes and BitMEX, and they're like, man, we really want to do like futures in crypto. But, you know, since it's cryptocurrency, it's very hard to do physically delivered futures because, you know, and it's even difficult to do cash settled futures because, you know, we have to wait for transactions to process, and, you know, people can self custody and people can withdraw their funds, and we can't, you know, with traditional assets like through the bank or the broker or whatever, right? Let's say, you know, you put money in your account and you take a big trade and you get wiped out and you end up owing the broker money. They just margin call you. They'll call you and be like, hey, we know who you are. We have your social security number. You KYC'd with us. You owe us money. We're going to come get that money. But BitMEX didn't want to be, you know, like trying to hunt people down who were anonymous saying like, oh, you need to deposit 5 more Bitcoin into your account to cover your debt. You know, people aren't going to do that. They're just going to disappear. And then BitMEX would be left holding the bag and they'd have an unprofitable company. So they came up with this idea of perpetual futures, right? Because normal futures expire on a certain date by a certain time. And because of that, right? So you can say like futures like can go up, can go down, whatever. But on almost all normal futures markets, there's a cutoff date. This is the expiration date, at which point all positions have to be settled and all positions are going to be closed out. So if you're up on the expiration time, you'll get paid out. And if you're down, you pay out, right? But that, again, we have all those challenges of like people with Bitcoin not wanting to, you know, deposit, not cooperating with the system and liquidity and all of this, right? So they came up with this idea of perpetual futures, futures markets that never expire, but this expiration date has the effect of normalizing price, because the price of whatever we're trading on the futures market isn't really price, right? It's only price insofar as the gamblers on that market are concerned. It's not the real price of Bitcoin. The real price of Bitcoin is reflected by the you could say by the average of the spot markets trading it, right? Because that's actually physical Bitcoin. That's the real price of Bitcoin. So we have these this expiration serves as a mechanism to keep exchange prices in line with real prices, right? Because we have the real price. This is like the we call it the index price, right? The index price is the price of Bitcoin on, you know, it's like the price of like Coinbase BTC plus Bitstamp BTC plus Binance BTC. And then we just average that out, right? We add all three of those up, divide by 3. And we get what is like the average price of Bitcoin across exchanges. Okay, that's the index price, and all futures exchanges keep track of that. And then there is the price that's on the futures markets, and we call this the mark price. All right. Now, sometimes because the buys and sells that are occurring on the futures markets are not directly impacting the spot markets, except by people seeing them and reacting, sometimes the mark price can deviate. Most of the time, the mark price will just like be right along with the index price. But every once in a while, the mark price can spike significantly higher. And every once in a while, the mark price can spike significantly lower. All right. And this can cause big price deviations. This is known as contango and backwardation, right? Contango is when the mark price is much higher than the actual market price. And then backwardation is when the mark price is much lower. And that's not good because that sets up all these bad trading opportunities and incentivizes people. So we need to have some mechanism to incentivize prices down when they get too high, and some mechanism to incentivize prices up when they get too low. All right, when they deviate too wildly from the index price. And expiration was the mechanism that did that. All right, expiration was the mechanism that did that because with expiration, as let's say, let's draw a graph. And you guys can go do all this math yourself. If you don't believe me, just figure it out. Let's draw a graph. And let's say that on this graph, we have basically like time to expiration. Okay. On the y-axis, or on the x-axis, excuse me. And then we have a price deviation from index price, right? So on the y-axis is going to be how much is price deviating from the index price. And on the x-axis will be like how closer are we getting to expiration. So you'll notice that on most futures markets, when they launch, their price might be, when a new contract opens up on a regular futures market, its price might be significantly higher or lower than the index price. But over time, as we get closer to expiration, that divergence will disappear, right? Until we get to expiration and we have pretty much the same price. So we could say that price deviation can start off quite high. Price deviation can start off. This graph isn't going to make sense. It'll make sense if I think if I flip them. There we go. Price deviation, timed expiration. Yeah, like this. Let's see here. Timed expiration is low. And anyways, this is the idea that I'm trying to go for, right? Where as we get closer to expiration, we see that price deviation decline. All right. We start off with a high deviation, and as we get closer to expiration, that price deviation declines. So that was the mechanism. Expiration was the mechanism that kept price in check. But we can't have expiration because of crypto, right? Well, it makes it exceedingly more difficult, and they chose that we couldn't do it. So we have perpetual futures. So now we have funding, right? So now we say, okay, going back to this example, right? We just keep a funding rate, and we just keep track of basically how bullish or how bearish the market is, just based on how, again, the only thing they look at is how much above the index price is the mark price, or how below the index price is the mark price, right? What's the deviation? When the deviation starts to increase, funding will increase, meaning if you hold a long position every 8 hours, you are going to pay a fee to people, to your counterparty, to the people holding the short side of your trade, right? And conversely, if you're short and you are basically trying to bring the market back into equilibrium, you're adding more shorts to the market because the market's too high, you need to bring it back down, you're going to get rewarded for that. You're going to get funding. All right. So funding is the mechanism that keeps mark price in line with index price. And for traders, this is the long-winded explanation, but for traders, we can use that as a gauge of how bullish or bearish the market is, and potentially as a sign of how overheated or cool the market is. Because when funding is very high, it means the market is very greedy. It means lots of people are trying to long. And sometimes that can mean, okay, great, the market's really bullish right now, so we're going up. But sometimes it can also mean that, no, the market's too bullish and we're going to go down, right? Conversely, just simple quick hacks I use for funding rate. Like if the market has been pumping and then funding turns negative, we're going to get a sell-off, right? May not be like a huge sell-off, but you're going to see some red candles, right? So either like chill out and buy the dip or short the movement. Conversely, usually when prices have been screaming down and funding drops really, really low, usually you get a reversal similarly, right? So that was a long-winded explanation to basically say that funding is the mechanism that keeps mark price, futures market price, in line with the actual price of Bitcoin. Funding is a mechanism that was invented by BitMEX and Arthur Hayes so that we could get rid of expirations and have 24/7 markets, just like spot markets, and also just make it easier to do crypto futures. And that's a wildly successful idea that has permeated throughout the market. And then funding is also an indication of how bullish or bearish the market is. And we can use it like any indicator. Obviously normal levels are quite good. Very high levels are cause for concern or reversal. All right, somebody clip that, make that into a short. All right, let's go. 10 o'clock. 10 o'clock, guys. 10 o'clock for me here. Oh, we've been going for 1 hour. Life's good. Get a sip of water. What's this? Wow, I'm not doing that, so. My watch was telling me I have something to do, but we're not doing that anymore, so. All right, guys, let's check in and see. Let's check in with. Check in with our bottom feeder strategy. Bottom feeder strategy has been crushing it. 89% win rate in 2023. No currently open positions. We just close out. Yeah, we just closed out another. Wait a second. Yeah, GRT, right? Yeah, we just closed out this win on GRT on the 10th. Let's see here. 10% win, 10.23% win. Not bad. Previously closed out Ethereum Classic, Solana, RLC, CHR, and ETC as well. So bottom feeder's doing pretty good. Nice win streaks, couple of losses. That's kind of how we've been progressing throughout 2023, 2024. Nice win streak. Here we had a pretty good loss in a row, but other than that, bottom feeder's been absolutely crushing it, guys. And yeah, the total portfolio just based off 1% risk per trade has returned 302%. 2% risk per trade, obviously. Obviously, 600%, 2% risk. So very good. Very happy with bottom feeder. It's been crushing it. Bottom feeder is available to all our premium members. All right. Let's talk about some other things. Roll-ups as a service. Dimension, alt layer, anchor, and gelato. Pretty darn good. Dimension at $8. Is it overvalued? Yes to crypto. Thank you for the 20, man. Thank you, brother. Highly appreciate it, man. Funding explanation was banger. Thank you so much. You're welcome, man. Very clear, and I feel I understand it now. I'd tip you in degen if I could, so go buy yourself a little stack. Hey, man, I'll do it. Go buy myself a little 20 ball in the degen. Ride that wave. Thank you, man. Thank you. I really appreciate the support. Okay, let's talk about. I don't really care about. I mean, Dimension is in my portfolio, but we don't need to talk about it right now. Like, there's just nothing to do. Like, I've just got to. I got to hold it for like a year, right? We'll see what happens. Let's see. Global crypto market is currently at 2.05 trillion, 1.67% to the upside. Total trading volume in the last 24 hours was just under $100 billion. Bitcoin dominance at what? Bitcoin dominance at 53.86%. USDT dominance at 5.09%, still continuing the downwards decline. Okay, good. Gold's 2,189, oil 76.42. Stock market's up about 1% using the SPY as proxy. Let's see here. Big gainers on the day. GX chain. Rock. Top losers, unfortunately, Lords. One of my holds. Daily reminder to be doing your airdrop hunting, guys. Bitcoin Fear and Greed Index is at 72. Interesting. We kind of cooled off a little bit from the extreme greed that we were in yesterday. Interesting. This is interesting. Miles Deutscher over on Twitter suggesting that YouTube views, which is the strongest retail indicator. I never thought about that. Overall crypto YouTube views is the Miles Deutscher is arguing is the strongest indicator for retail sentiment. All right. And he's saying that YouTube views are actually lower than they were in 2022 during the bear market. All right. Is that true? We know that the rally is currently being fueled by spot. This is one of the rallies. This is one of the rare Bitcoin rallies where it is not retail that is, or where it is not futures that are driving the rally. This is actually This was futures, but this is spot. The last 2 weeks has been spot. All right, which is incredible. Which is why it's quite so powerful. And since this rally is being driven by spot and the fact that YouTube views are lower than they were in the bear market, yeah, imagine what happens when those YouTube views come back. The bounce off the hourly 21 was fast and then ran right into a wall in the middle of the range. Not super bullish. Not super bullish, we feel. Yeah, I mean, look what happened the last time. Look at what's happened every time we've tried to reclaim this daily point of control. Right? We've just failed. We just failed. All right, let's see here. Narratives of the week. Narratives of the week. All green across the board. Bitcoin dominance is going up. Ethereum is on par with BTC. Gaming has been one of the hottest sectors. We need to go to Dex Screener so we can look at some DeFi stuff. Here's DGen. First pullback to our first major moving average. Let's see if we can hold the uptrend. See if we can hold the uptrend. Mavia, which I believe has 4x. Yep, Heroes of Mavia. Gaming token right now. It looks like we're only up 156% on Mavia. Am I missing something? Mavia launched on... Yeah, I mean, it's on Pulse. And yeah, all the liquidity is here. 5.7 million in liquidity. Okay. FTV and market cap is the same. All right, $2.7 million of the pooled Mavia, $2.9 million worth of pooled WETH, meaning there's more WETH than Mavia in the pool right now. Announced no. Hidden owner, yes. Transfer possible, yes. Has a blacklist, okay. 52,911 holders. 10 holders are LPing. All right. Okay. All right. Let's see here. Mavia. No. Okay. Too bad. Social volume is a thing. On chain, total amount of holders. Okay, total amount of holders is increasing. That's good. Supply distribution by balance of addresses. Let's see who's holding Mavia. Okay. Wait, no, sorry. This is not it. No, we don't want that. Unfortunately, we doesn't look like we can get it. Yeah, they're just gonna give us. Let's see. Supply held by top addresses. We have seen whales. Oh shoot. Seriously? That's crazy. Wait. As percentage of total supply. Right. So the top addresses hold 97% of Mavia. How does that make sense? Because the FDV is the same as the market cap, which would mean that all tokens have been distributed. And they're saying that doesn't. Hold on. Let's go to Etherscan. .org or .io for the love of God. Jesus. Come on, Ethereum. You gotta switch that up. All right, let's go find this Mavia. Heroes of Mavia trading at $8.20. Holders. Okay. Not lying. 87% is held in this wallet right here. And then 5% is held in ByBit's hot wallet. And then this is another exchange, KuCoin Gate. This is the allocation for the airdrop. Okay, so I don't know what this wallet is. Let's go find their white paper. And currencies. Coming soon. All right. Heroes of Mavia is an online multiplayer blockchain-based strategy game where players use their base and army. Maybe we should just play a little maybe we could play a little Mavia, right? Maybe we switch this into a gaming channel and we just start playing these like blockchain games. That could work. All right, so awesome. I love that their white paper is so fleshed out. Thank you so much, Mika. Let's see what find on their ICO. Token sale ended on the 6th of February. They raised $8 million. Does DeFi Llama confirm that? Raise overview. Okay. We need to launch a Heroes of D. Yeah, you're absolutely right. Guys, hey guys, I'm just going to grab a coffee. I'll be right back. You know, I've noticed that a lot of other streamers do something that I don't think I can bring myself to do. I noticed that a lot of streamers will... A lot of streamers have headphones on when they stream, and they're actually listening back on their stream, meaning they can hear the music and the sound effects and themselves talking. And it's that last part that I could not possibly bring myself to do. I don't think I could. Yeah, I don't think I could hear myself talking and then continue talking narratively or in a good way. Yeah. Woo! All right, good morning. All right. So we're unable to confirm. But according to ICOdrops.com, yeah. Get a white paper link here. Oh, here we go. Finally, a white paper. Here's their deck. All right. I want to see. And if, yeah, we know. I don't care about the gameplay. Sure, looks cool. Mavia, governance token, currency used for buying and selling the NFTs, staking rewards and staking NFT prizes. Mavia is not an in-game resource. Ruby is the in-game play-to-earn reward currency that allows players to upgrade their NFTs. All right, so you need Mavia to buy stuff, and it's also the governance token. Ruby is the in-game play-to-earn currency. So Ruby is absolute garbage. It might have a run-up like AXS, but it's garbage. Like all those tokens go straight to zero. Max Welch, thanks for joining the stream, man. Take a look at Cody. Yeah, give me a sec, man. We'll take a look at Cody. I want to know what the tokenomics are. Ways to earn Ruby, Ruby use cases, intuitive web platform. Nothing intuitive about your platform. All right, here we go. Mavia tokenomics. Private sale 15%, ecosystem fund 25%. All right. So 25% of allocation. All right. 25% allocated to the team and allocated to advisors. So that means 25%. Hold on a second. This is the math that Alex and I, well, it's my idea, so I don't want to say this is Alex's idea if it's a terrible idea. But okay. So Mavia raised $8 million. Let me think about this for a second, because this is this is the formula which I'm trying to work out. Maybe you guys can help me out here, because I'm struggling with it, but I think this is a good formula. Oh no. Whiteboard. The idea is this. Okay, the idea is this. All right. Maybe a tokenomics. The idea is, okay, the example is this. Token A raises 200 million at a $1 billion valuation. Okay. FDV grows to 10 billion. So that's a 9x. And token A has a 30% team allocation, right? This is investors, team. Okay. So at a $10 billion FDV valuation, that means the token A has 1.8 billion. 1.8 billion in unrealized profits from investors, plus 3 billion to the team. Sorry, team allocation is not investors. Investors is how much they raised. So the investors put in 200 million at a $1 billion valuation, and when price 9x's, so does their investment. So investors are expecting $1.8 billion in return. All right, $1.8 billion, and the team has a 30% allocation, right? Which means that $10 billion, the team has earmarked 30% of all token supply for themselves. That means $3 billion. So that is $4.8 billion of the $10 billion FDV that is earmarked for investors and team. Almost 50% of all the profits in this example. Almost 50% of all the oh, by the way, yes to crypto. Thank you. Oh man, thank you so much for the re-up, man. 27 months you've been with 2 years? 2 years and change? Man, we rolling, dude. We going. Thank you for all the generous support, my friend. When done with Mavia, I'd love it if you could revisit DGen before end of stream. I enjoy learning what you teach on a token I care about. Yeah, no problem, man. We'll actually take a look at Sandiment and see if we can get any DGen stats now. Unfortunately, I don't think so. Take me off your list. All right. So what we need to figure out is with Mavia, we know that they raised $800 million at X valuation. We need to know what their valuation was prior to token launch. And FDV has grown to FDV has grown to 2.052 billion. So we have to figure out what their original valuation was. That's the only part I don't know. Let's ask ChatGPT. Okay. Are you aware of any websites that will tell me what the valuation of a crypto token or project was during fundraising? ICO drops, token data. Okay, let's see if we can find the information on ICO drops. Seed round, strategic funding. And we know they raised 8 million. Binance provided 5.5 of that million. So Binance led the 5.5 million seed round. Okay. Crypto.com put in 2.5 million. Okay. Taking the total amount raised to 8 million. And then we got the white paper. All right. What about... Oh, okay. Sorry. So the point of all this, right? The exercise is that we're doing. The point of all this is we are trying to determine... Okay, sorry. So let's get rid of Mavia for a second. So we've got token A example, right? This will become clear if we calculate out. Let me just give you another example. All right, let's look at token B. All right. Token B, for example, raises $5 million. Token B raises $5 million at a $100 million valuation. Okay. And then they launch their token. And let's say, oh, and they have a 20%. These guys have a 20% team allocation. Okay. And so now let's say their FDV also grows to 10 billion. Which is a $90. It's like, I don't know. That's like a 50x. All right. I'm not going to calculate it. Who cares? FDV grows to 10 billion. All right. Same as token A. All right. But token B has only $500 million in unrealized profits to investors. Sorry, I keep spelling unrealized wrong. And 2 billion to the team. Okay, that means that. All right, that's $2.5 billion out of 10 billion that's allocated to Team B. That is 25% of profit allocated to investors. What that means is that there's 75% of all that profit from the growth of their original valuation at investment to where they're currently sitting in the market. 75% of that profit is allocated to retail. All right. Retail can take part of that 75%, but 25% retail will never get. That money is going to the investors because they got the tokens, and 20% is going to the team because they have the tokens. This is about allocation of circulating supply. All right. It's about allocation of circulating supply. So if we compare token A to token B, token A has 4.8 billion of the 10 billion FDV allocated to investors in the team. That's almost, I don't know where the squiggly line is. Hildale. That's almost 50% of profit allocated to investors' team. So what does that mean? It means that token A is a lot heavier, right, as opposed to token B. And in general, you would want to buy token B, right? All other things being equal, you would want to buy token B, and you would probably want to avoid token A because it's so top heavy, right? There's not a lot of room. There's significantly less room for retail to get a profitable allocation of the supply, right? As opposed to token B. So understanding these, understanding this is pretty important, I think. I think this is important. So I'm trying to figure out how top heavy Mavia is. Oh, you're absolute. Wait. Since profit is 9 billion, sample A. It doesn't matter. Sorry. I get it. I'm wording this wrong. It's not necessarily 50% of profit because we still want to account for the original 1 billion valuation. It's just saying because the investors got $200 million worth of tokens, right? So they had 20% of supply there. And the investors are still going to get that 20% here. So 10 billion is the FDV. That's the value of all circulating supply. And we know that investors hold 20% and we know that team holds 30%, right? So again, it's a little under 20%, but yeah, it's like 48%. We still account for that. We're not just, I understand what you're saying. If we were just tracking the profits of the 9 billion, but we want to track the total value of their growth. So we would account for the cost basis as well. But good point, Robin. Thank you. Good, man. It's good to know like smart people are this. I love this channel, man. I love this channel. I love this stream. It's some of the best questions here. You guys are smart. You guys are super smart. So that's what we're trying to figure out. The only thing that I'm struggling with is that I don't know how to determine. Yeah, so here's all their investors. Obviously, Binance Labs and Crypto.com like did all of this, and like all of these other guys threw in like $1. Their roadmap, the tokenomics, but I don't know what their valuation was. Okay. And I don't know where to get that in. We could try, let's try token data. Token data might have it for us. Or not Masari Crypto, but what's the other one? Okay, I guess token data is not really what we're looking for. Yeah, this is just like their report. Let's try coin schedule maybe. Oh, here we go. Maybe this would work. Crunchbase. Maybe we could find it on Crunchbase. Not coin schedule. We want Avia. Or what is the actual name of the company? And what is it? Brillo Labs or some crap like that. Good deck. Scrice. Scrice Studios. Pressing and holding. Can a bot do this? Can a bot do this? I don't think so. You're welcome. Get out of here. Okay, here we go. Rice Studio. They're based in Hanoi, Vietnam. Private company. For-profit company. Wait a second. Oh, do I have to have Crunchbase Pro to actually see that information? Is there no place I can see it for free? That's so frustrating. Okay, that's fine. We continue our search. Token terminal, maybe? Try Masari. Launch terminal. Projects. Mavia. Not even on here. All right. That's a shame. Yeah, maybe it's not on here. No. Strice. Okay. Disappointing. And I didn't even see them on DeFi Llama. They're so fresh, that's frustrating too, that we can't. There's just not a good place to find this. That's chainless. Yeah, Tyler, you hit the nail on the head. Token A is a more dump on your face. Exactly. That's the point. That's the point. Behind that Crunchbase Pro paywall, which if that's the case, I'll just try and mess with that after stream. I don't want to screw around with it right now, but I'll try and mess with that around after stream. Let's pivot. I mean, we got 20 minutes left, so let's is the spinning circle in the middle of the stream a lagging indicator? Oh, good stuff, man. Good stuff. Good stuff. Oh, what was I gonna do? I'll call it. Okay. Oh. We got some rejection from Bitcoin. Is that what's going on? Yeah, sure looks like it. Oh, that's right. I gotta look at Cody for Max and Degen for sorry guys. I kind of fell down into the Mavi the Mavi rabbit hole there, and I apologize. 1 second, I just generated a new image for the stream, so I am going to save that real quick. And studio mode. Oh. Bring that here. Okay. And we're just gonna image source, add new source. And Transform. Screen. And creating video mode off. Yeah, so obviously unfortunately this will delete the chat, but now like when you guys like get me like super excited, I can do this, be like rage quit. You guys like the misspelling because ChatGPT made that image for me? Yeah, you like that? Very rage. Hourly bear div. Stokes down, close below the 10, maybe. Yeah, it's just LTF, but it starts somewhere. Much Discord, right? Dixie's looking bullish. Concerns about Dixie Bitcoin convergence? No, we're actually getting to the point where I would expect mean reversion. And downside protection super cheap on the SPY. Volatility is at like 12.9%. You know, as opposed to like Bitcoin's 51.2%. So again, I've recommended that before. Buying downside protection in the SPY works too. Not a lot of crypto traders aren't super comfortable with that though, just because they're used to just trading crypto, and that's totally fine. All right. Degen. Man, I'm sorry, bro, but they just have not added. Got no data. No data on the degen. And I don't think we got data on token terminal. Negative. I think this. We can get rid of this. Flipside crypto. Again, sorry guys, I'm kind of getting distracted. Yep. Not on the Llama either. We don't. Cleaning things up here a little bit so we can be a little bit more dangerous, I think. I am seriously considering sliding into Mavia here, though. But probably wait for a better opportunity. No, I wouldn't listen. Yeah, like you could certainly buy VIX. Yes, buying VIX would probably be good. Betting on VIX to the upside would be good. But I'm just saying buy, go long on puts for the SPY at money. Long dated. Might not play out. We could still keep pumping, but when downside protection's cheap, you hedge, Hedge when you can, not when you must. Hedge when you can. You got a big portfolio. It's all long. Think you're gonna, become a billionaire? Buy puts once in a while, man. Protect yourself, hedge yourself. Yeah, so Mavia is definitely going on the watch list here. And I think I'm gonna set an alert. Alert me when price goes under $7. Right? Price. Give me that little, let me know. Keep me aware. Keep me posted. You know what I'm saying? Let me know. We're going to do degen real quick, and then we're going to do Cody for you, Max. I promise. I apologize. Degen Weth. Right? Is that where they have the most liquidity? It's on base. Right. Yeah, it's on base. Liquidity 2.3 million. Yes. Okay. Degen on base. And I don't even think we need Hey, I just really wish that I had some on-chain data, because right now, like, I could pull all this out and analyze flow, but can you even do that? Will they let you do that? Can you export this data as a CSV? Right? Is there a way to... Anybody know? 17,000 holders. Top traders. One gentleman has a P&L of $446,000, about 134,000 over 8 transactions, and he sold over 30 transactions. Dude bought twice, sold 13 times, made $414,000. Dude bought 14 times, sold 20 times, $371,000. This dude just got the allocation, so he never bought. Got the allocation, so he never bought. Bought once, sold 21 times. This dude turned $20,000 into $288,000. My dude. Can we just get some salutes in the chat? Like, my God. Good for you, buddy. Balance. This guy's still holding. Only has $12 of unrealized P&L. It was about 100 grand worth of unrealized P&L, so still holding. Guys, hold everything. Guys, just about all the top, listen, all the top traders have sold. All right, I just want to point that out, bro. All the top traders have sold. All right, all the people who made a lot of money, they're not holding the token anymore. Because we can see that they... Again, I mean, maybe. It does say balance unknown, but at the same time... Yeah, because this guy bought 55 million, but he sold 200 million. So he must have gotten 150 million in airdrop. Is that even possible? Number 6 on the list. This guy right here. Bought 10 million, sold 80 million. So we got 70 million in the airdrop. I don't know any details about the airdrop. Does that sound right? Were people getting like 70 million, 100 million tokens from the airdrop? Like, how many tokens did you get? You know what I'm saying? And why? What was the mechanism of how these people got differential token treatment? Pre-sale, ICO. Max airdrop in phase 1 was 33 million. Okay, yeah. So we just, yeah, okay. So it is, so it's possible then. Yeah. Excuse me. Yeah, so it's possible. Yeah, airdrop 1 was activity based on Farcast or likes, engaging questions for everyone. Yeah, so all right, yeah. So with a little like insider knowledge, a little inside trading, yeah, okay, possible. I'd say it's unlikely that these guys are LPing. These guys, the way their profile reads, like, these are sharks, right? They got in, they got out, right? They traded this very well. And then yeah, even down here, like, it just seems like most of these people are completely cashed out or holding on to very little of their bags. This guy's still holding on to quite a bit. Number 46. He only made 50 grand though. He's got 250 unrealized. He's trying to turn this into his $1 million thing. So definitely possible. Definitely possible, man. I'm not trying to scare you out or, you know, say bad things. Okay, let's see here. All right, so life's kind of changing now. All right, so we'll make this pretty. Yeah, I think this is the way I would look at the market. Okay. All right, so DGen price is currently at 0.252. All right. We have a big range now. All right. We've got strong support at 0.14. Okay. We got strong support at 0.14. And we have very stiff resistance at 0.38. All right. So you've got a pretty volatile range. That's like a 2x range. It's like a 100% range, give or take. It's more. It's 156% range. All right. So definitely lots of volatility options right here. Okay. We have had, again, a nice retest of support, a nice breakup and rejection from this level of resistance so far. Nice double top here, and now kind of a double bottom. So again, consolidating at a higher range, ideally reclaiming previous resistance as support. That would be very good to see. Again, bullish trend. We've got our faster MA over our slower MA, and we do have price above the slower of the MA. So pretty steep pullback. Again, trend following traders would probably buy here. That's totally fine. Long term, of course, you can just continue to hold. It does get scary. Break of 14 gets scary because the next level of support is all the way down at 666. So break of this support right here is a 58% decline. And from current prices all the way down here is a 76% decline. All right. So definitely at our first big opportunity of profit taking here, there is a greater than 80% chance that price will never go above that all-time high, my friend. It's actually higher than that. I think it's 88% of all coins do not go above their previous all-time high. All right. And I'm sure that statistic actually probably jumps up to 90 to 95 to maybe even higher when we're talking about coins that aren't listed on centralized exchanges. All right. Coins that aren't listed on centralized exchanges is probably a special cohort of the overall cohort of coins that never pump past their all-time high. All right. So again, I'm just throwing that out there. I don't want to be a Debbie Downer. We do have a bull market. All right. I know you guys love DGen, and I want you to do super well with this. But the vast majority of coins, after they have a big spike, do not spike again. All right. So stiff resistance at 38. Okay. And the market gets pretty scary below 14, because if the market breaks down below 14, you've lost all the momentum, and you're going to have to wait probably at least 3 to 6 months for a long period of consolidation down in that 4 to 7, like 0004, 0007, that's consolidation range right here, before price makes a move. And if that's the case, it's very unlikely that price makes a more powerful. All right. So with that in mind, of course, we could rally. We could be the small percentage that doesn't. We want to look for a break of like 38, right? Break of 38 would be very powerful. If we can break above 38, not 38, then I could see smooth smiles and smooth skies and clear skies and smooth sailing, for the love of God. For the love of God. But yeah, we definitely got distribution right now. Again, the buyers have stepped in and held at 15.12. And it would be very interesting to see. I would love to see that would be a killer indicator. And it's possible to get with the data that's available down here. I would like to see I would like to see a breakdown. I would like to see VRVP, but with additional information such as like who are the buyers at the different prices and what their current holdings are. See, we can see that information with on chain. So good stuff. We can see that data on chain. Okay, we are at 2 hours. We didn't hit the member goal. I shouldn't be extending the stream. But I did promise Cody, so we are going to look at Cody. Dex Screener has an app util landing page for data. Can you tell me how to get there? All right. All right. I'm on my own. Okay. Cody. All right, man. Sounds good. All right. First off, let's start off. Since Cody is a centralized exchange traded token, we can kind of chill a little bit on this. Disgust me, XRP. All right, let's think about this logically. All right. So Cody launches. Cody launches. Rallies 352% from launch. Retraces 95%. I don't believe that for a second. How could that be right? What are you talking about? That is... What? That really is. That's really disconcerting for some reason. Anyways, let's not get weirded out by it, Justin. Let's just carry on with our analysis. All right. Anyways, Cody rallies 352%, declines 94%. Overall, not bad. Okay, impressive. All right. Let's see. What did we do? Just out of curiosity, what did we do over here? Looks like an 886. Yeah, it is an 886. Did an 886 exactly. And then what did we do here? 886 didn't hold, did a full retreat. Okay. So, all that, well and good. Okay. Why is it text? I just haven't. Yeah. All right. Weekly resistance is overhead. All right. I do like Cody. It is pumping, but it hasn't broken out. I do like the pattern. I do like the volume signature though. Massive explosion of volume right there. That is very important. After volatility got crushed, After volatility got crushed, I think is pretty important. I normally don't like buying things at resistance. I would like to see a bit of a cleaner breakout, but Cody has moved pretty decisively up into that upper area, and a big, again, big explosion of volume coming into the market there. We are all set up to kind of begin a trend because weekly BBWP did get crushed here. And while we are getting kind of high, things could get ludicrous. But did we get those? I don't think we got sufficiently big movements, and the resulting move is always going to be a factor of oh, Alexander in here trying to get me into Myra. I probably will. I've been looking at Mavia this morning. I probably spent about 45 minutes analyzing Mavia. Alex, this is something you could maybe help me out with, right? So we figured out the math. All right, we got all the information. Sorry, hold on. I'm distracting from Cody, but we know that Mavia raised $800 million, but I don't know what their valuation was at raise. And now we know that their FDV is $2.052 billion. All right, so trying to do this, this mathematical formula that we were trying to figure out yesterday, so we could figure out how investor and team heavy Mavia is to see if it's worth going in, because the chart looks really good. Yeah, the chart looks really good. Yeah. Just did their airdrop on January 21st. Blockchain gaming. Pretty cool game. So if you could find me the circulating, yeah, it's full distribution because market cap is the same as circulating supply. I'll talk to you. I'll talk to you after the stream. Cody. Okay, so very impressive volume on the weekly. I can't deny that is very impressive volume. Now we did wick away from that resistance level, and again, we are in that high volume node. So again, I do like Mavia here. Me personally, I would want to see a breakout above this area. I would like to see a weekly close above this area, and then I'd go in. The risk of kind of coming up into this high volume node and just chilling for a while. The other thing too is actually, you know what? Because Cody's up 140%, and that is 2x like what it declined from here to here. So BBWP getting petered out, we do want to assume that the bigger the move leading in to the signal, the bigger the move coming out of the signal. The smaller the move going into the signal, the smaller the move coming out of the signal. All right. And we've already gotten a 2x move off of that signal. So oh my gosh. Okay. But I mean, this is good, man. Look, we're above our major moving averages. We don't yet have a bullish MA crossover here on the weekly, the 21 over the 55. That would also be another good confirmation signal to watch for. RSI is growing quite nicely, but here's the thing. RSI, again, we've had this big explosion up into resistance. That is scary, and RSI is moving into overbought territory on the weekly. And BBWP is getting close to getting pegged out. So obviously two things can happen, right? We either reject from resistance, we're just not quite ready to break out, or this was the move. We consolidate at resistance for a little bit. My ideal thing that I would like to see here for Cody is like, yes, I do think it's good. Yes, prices are cheap. So if you feel very strongly about Cody and you want this in your portfolio, you could start DCAing in here, right? You could start DCAing in here. I would never recommend going all in one position, especially if Cody is something you want to hold for the long term. This is a really good price for Cody. So you could do something pretty hefty here, like 25%. You could go in for like 25% of what you want from Cody. And then that way, if price does reject from resistance and takes a little bit longer to wind up, let's say we do enter, a bearish trend for the next month. Let's say Bitcoin does reject from 52, 53. So all of these things that are pumping are going to stop pumping for a while, for a month or so. And all of these things that look like they're about to break out, nope. Alley-oop, right back down. So I would really like to see from Cody, I would really like to see, again, you could start allocating here. That's totally fine. I would really like to see price move up into resistance, and I'd like to see consolidation. There's going to be some fake breaks. There might be some fake breakdowns, but I'd like to see consolidation here at the high volume node. And then I'd buy the breakout. I'd like to see, I want to see price go up into that area. And then I want to see BBWP come back down. And I'd love to see a volatility crush again, right? RSI resets, volatility resets. And then we get the breakout from resistance. That's what I'd love to see. And then, yeah, I'm all in. But since we're underneath resistance, even with this volume, I would just begin allocating 25%. That way you can DCA on the way back down, or you can start adding on the breakout as well. Yeah, that's a great quote. Jesse Livermore said to never enter your position all at once. He would always pyramid in, but he also wouldn't add more when he was underwater. His philosophy was, why add to a losing trade? Sometimes I wonder if he's right. Actually, that's not bad. That's not a bad philosophy. Maybe we make that a rule. Don't add on the way down. But see, that also goes contrary to my life experience, because I've run DCA bots before and I'm profitable with them, right? Like, of course, not all the time. DCA bots aren't just this magical thing that you turn on and make money. They're this magical hobby that now drains all your time and attention, and you find yourself up until 4 o'clock in the morning trying to figure out a 0.01% deviation in your system. So, right? Yeah. Again, time is on our side, right? Like DCAing into losing positions in a bear market or a sideways market, probably not good, right? But DCA, like being okay to DCA into the downside, like when we know things are overall bullish and we have strong conviction that things will be bullish in the future. Yeah, sure. Buy dips. Let's go. Right? Right. The truth is, you should have a reason why you add on a pullback. Right. Why are we adding on a pullback? Because it's a fucking bull market. Let's go. All right. Anyways. That's it for me. Obviously, you can tell that the coffee's starting to kick in, guys. But wonderful stream. Max, I hope I was able to help you out with Cody here, my friend. Again, you could start DCing into a longer-term positional trade here. I do like Cody. Or you could wait for that breakout. And then Alex gave us some nice considerations on adding on the way down or adding on the way up. All right? Things to consider. You guys have been absolutely amazing. Let's turn the music off. We can have a more candid conversation. Thank you guys so much for joining me for yet another morning live stream, analyzing the cryptocurrency markets, looking for good opportunities. We are looking for profit in everything that we do. But thank you guys for all your generous support. If you enjoy the stream, if you want to continue to see my face every single morning, we need your support. We cannot do this without you. We make free content all the time. If you want to support us in making this free content for you guys every single morning, please support the show, become a channel member, click that join button. You will get some amazing perks. And over the next few months, we will have our channel members are going to have access to some of our signal channels. They're going to have access to some of the perks, some of the perks of our premium membership system, because we are going to be moving the premium system over to Kajabi. So that's going to be happening in March. And so you can expect those changes. You also get, of course, emotes and ways to support the stream, exclusive videos, and access to things before the general audience gets them. You can do that by clicking the join button and becoming a channel member for as little as $3 a month. And I would recommend doing that because very soon that price will be rising to $5. Oh my God. If you would like to support the stream but you cannot afford to do so, just please hit the like button. It is the most impactful thing you can do every single stream. It helps get our content out there to people who haven't seen it before, and it really, really helps more than you could possibly imagine. If you want to copy trade me, link is down in the description, as well as links to everything you could possibly use. Go grab your CypherRock device and protect yourself from cryptocurrency thieves. Join our Discord to keep updated on the latest, and we will see you guys tomorrow morning at 8:30 a.m. to 9 a.m. to 10:30 a.m. to 11 a.m. Mountain Standard Time. Trade safely, emotional discipline, and risk management. Pay the bills. And I'll see you guys later. Cheers.